Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all you had a very nice day of trading today. And in today's markets, guys, well, the SPY and the QQQ continuing on their little rally. It has now been 3 green days in a row, which is more than we can say than has been the case in the last 1 month worth of trading. However, with big resistance areas coming up above us very shortly on the SPY and the QQQ, could we possibly be seeing the bears soon come into play? Well, that's what we're going to take a look at in today's video. In another piece of news today, we had a consumer confidence report that came in early this morning that showed that rising fears of tariffs pummel U.S. consumer confidence to a 4-year low. Now, even though that report was quite bad in terms of the consumer's outlook in the near term for the economy, the market's still going up green, which raises the question, has possibly all of the negativity been priced into the markets already? Well, we'll also have a look at that in a few short moments. In today's video, we're going to do a few things together. Number one, dive into that consumer confidence report and go over that Reuters article that does a deep look into it and gives some opinions on the matter. Number two, we are going to be going over all of our technical analysis on the major stock market indexes. And lastly, the big tech names as well. There's been a very nice rotation back into big tech over the last 2 weeks. We'll take a look at a lot of these names and see which ones are possibly still at great locations for either short-term trades or even long-term investment purposes. And to wrap it all off, guys, since we'll have a bit more time today, we'll go through one of my favorite lists, the options list. Take a look at the companies that went down the most today and some of the companies that went up the most today and see if we cannot find any other opportunities in those trades as well. So it should be a very fun video and shorter than usual. Let's jump right into it, shall we? So the SPY up 0.24%, the Q's up 0.57%, and the heat map overall, guys, did not look all that bad today. If you want me to refresh, you can see it right here. Most of the big tech names coming up green, except for semiconductors lagging behind today. Financials doing okay. Healthcare, little bit of a retracement, some bigger than other, AbbVie and Merck as well. But all in all, not too bad of a day of healthcare, but they were lagging on the indexes. Consumer staples dragged down by Walmart, and a lot of the value names that were popular 2 weeks ago have been pulling back as we've seen a big rotation back into big tech. If I put it on a 1 week relative, guys, you'll see all the defensive sectors that, CNBC and others were telling people to pile into in the midst of fear. Those trades, as soon as they came, they have now largely been unwound. A lot of them have, as a matter of fact. And outperformance comes in the big tech names once again. Moving to the days again, real estate and utilities coming to the downside as those sectors as well were not safe. Moving into the 1-day relative, you can see that even better to where it was a very mixed market depending what you were invested in. Communication services to the upside, that is largely led by Google and Meta having a very good day. Consumer cyclical, financials also top of the board. And to the bottom half of the market, well, consumer defensives, real estate, healthcare, and utilities. These are supposed to be the anti-recession trade. When fear is high, they're supposed to be going up. But now that we've seen a very quick pivot back into growth, as maybe we've priced in maximum fear, at least in the short term, well, now you're starting to see some of the sectors that got beaten down the most in the past month come back and start to show a little signs of life. So before we get into more technical analysis, let us dive into that consumer confidence report, shall we? And I'll just be going over this article by Reuters because it does a good job of summing everything up. So that headline we read already, let's get into it, shall we? U.S. consumer confidence plunged to the lowest level in more than 4 years in March, with households fearing a recession in the future and higher inflation because of tariffs, of course. The survey's measure of future expectations hit a 12-year low and breached a level associated with an economic downturn. Now, the Fed also commented on this last week when they spoke. They said that these soft data reports, such as consumer sentiment and consumer confidence reports, you can have to take them with a little bit of grain of salt overall. Not always have they been good predictors of an economic downturn or an economic recession, and we'll get into a bit of a discrepancy here later on in the article as well. President Donald Trump's on and off again tariffs have been panned by economists for sowing confusion and uncertainty that they said was making it challenging for businesses to plan ahead, to the detriment of the economy. Trump on Monday indicated that not all of his threatened duties would be imposed on April 2nd, and some countries may get breaks. That's what led to the rallies, guys, on Friday and the Monday session as well. But at the same time, said tariffs on imported automobiles were coming soon. Consumers are rattled, said Carl Weinberg. That is definitely true. The fourth straight monthly decline in confidence mirrored a similar deterioration in the University of Michigan's consumer sentiment measure. The drop in confidence was driven by consumers over 55 years old. Morale in the 35 to 55 year age cohort also worsened. but confidence rose slightly among consumers under 35 years old. Confidence slumped across income groups, with the exceptions of households earning more than $125,000 a year, possibly because they feel a bit more insulated. Consumers had, over the past few months, been generally upbeat about future income. That has since been unwind largely. So here are the current conditions. Consumer confidence coming down ever so slightly, but that's been the case since 2022 as the effects of inflation and the increase in prices that we've seen in the last 2 years are starting to take their toll. Future expectations, there's the break to the downside, which we started really seeing over the past 2-3 months overall. And it is indeed one of the worst prints since 2013 in terms of forward expectations, right? Keep in mind, these are surveys, guys. Rising recessions worry. The share of consumers anticipating a recession over the next 12 months held steady at 9-month highs. Despite the gloom, however, consumers showed little sign that they planned to dramatically curtail spending for now. So that's the discrepancy. Even though when they answer the questions, how do you feel about the future of the economy? They're not very bullish, right? Well, are they changing their spending patterns? Those very same respondents saying no. That's the discrepancy. Many intended to purchase television sets and household appliances like fridges, microwaves, and washing machines, with the conference board saying it was likely preemptive buying before tariffs lead to price increases. There were also a rise in shares in the share planning to go on vacation and an uptick in those planning to buy a home. So still, consumers wanting to do some large ticket purchases, home buying, vacations, appliances, those are not cheap, right? And it's not all to try and be preemptive for tariffs. Definitely not vacations and buying homes and stuff like that, right? Moving on further, consumers' median 12-month inflation expectations jumped to 5.1%, the highest since May 2023, from 4.7% last month. That's literally just a question. What do you think inflation is going to be? They give them different multiple choices, right? Between 4 and 5, 5 and 6, etc. And consumers just pencil in what they think is going to be the case. While the relationship between confidence and spending is weak, economists said the continued deterioration should not be ignored, adding that it aligned with their forecasts for slow economic growth and high inflation this year. We went over this last week when we covered the Federal Reserve expectations. The Fed overall, guys, is expecting a drop in real GDP for 2025 and early 2026 as compared with their December projections. The unemployment rate, though, still good. Notice no comment on a deteriorating labor market, and PCE inflation, short-term uptick right here, possibly because of tariffs if they're kept on for too long. Uptick in PCE inflation, uptick in core, but longer run rate still sees the Fed being able to bring inflation down to the 2% target. We also went over this research by Goldman Sachs. The impact of the tariffs, as you can see, will mostly be felt in the fall of 2025 and then taper off into early and mid 2026 overall. And this is over a number of different case scenarios if the tariffs are maintained throughout that entire time. So as you can see, consumers as well thinking there might be an uptick in inflation, but still the discrepancy arises. They're still spending money. It's just their confidence has kind of been, as this one analyst said, right? Their confidence has been rattled overall. So that is the consumer confidence report that came in today. Other news headlines for the rest of the week, guys. The biggest one is probably going to be GDP, even though it's a final estimate. We've gotten the estimate for Q4 over the past 3 months. This will be the final tally for GDP and also when they adjust Q3 GDP as well. And on the Friday, arguably the biggest day of the week, that is going to be your core and regular PCE, the Fed's preferred gauge of inflation. If it's anything like the CPI and PPI reports we got, we could possibly be seeing a little bit of normalization in inflation, not expecting a very big uptick there. But these are definitely probably the 2 biggest days in the markets for this week. So now that that's out of the way, let us dive into the SPY. And before we do as well, take a look at the SPY. But number one, I have to remind you 2 things, right? Fear and greed index. The fear and greed index is still at fear, not at the lows of extreme fear that we were 1 week ago, but still markets largely in fear condition territory. We also remain in a period of somewhat weak seasonality coming into the end of March. That's when you typically get a bounce, which is what we did indeed see. The markets bottomed relatively early on in March, and it's kind of following the seasonality path to a T. Maybe if the April 2nd date for tariffs, aka known as Liberation Day, is not so bad, can the markets continue to see a bounce in the month of April? Well, we'll take it one day at a time, guys, because we know this is a very political headline-driven market right now and not so much factual data. It's all about the future expectations, as we've been seeing over the past 2 weeks, right? So those are going to be the biggest things to watch over the next couple of days, weeks, how this fear and greed index evolves, and also, do we mirror common seasonality that we've been seeing? So enter the SPY right now, taking a look at this right now. The daily uptrend is still well in motion by the bulls, but as I said, right, resistance is very close above. We're into it now. 575 up to 585. The bounce is very nice on the weekly overall, guys, but still, as I was saying yesterday, it is only a 40% retracement right now into resistance. If for some which reason we start losing the daily uptrends in the next few days into the April 2nd tariff day as well, that will be a weekly lower high. Then it's up to the bulls to play defense down here again, 565 to 551. But with such a weak-ish bounce, the likelihood of revisiting the lows still remains somewhat high. So we'll take this one day at a time, guys. Not the time to be chasing the markets, in my opinion, into resistance, especially not before that April 2nd deadline. You have to be very, very, very cautious with your trades, but also very patient and wait for the market to come to you on your favorite high-quality companies. Moving on to the QQQs right now. Very nice rally on the QQQs. Daily uptrend is set. Any move lower, going to be looking for a higher low. Anything above 473, looking for the higher low for possible further trend expansion. However, we do have resistance above us right now. 500 down to about 595. That is this pocket of prior resistance right here. It was support for the bulls a few times. Now it will be resistance again, running into the 26 EMA. But nice to see that the Qs now clearly closing above the 200 moving average, and also the SPY also well clearing above that 200 EMA. So you like to see it, right? However, on the weekly, as I was saying yesterday too, keep in mind the size of the bounce. Yeah, size of the bounce, only a 38% bounce. So if you get rejected right here, you lose the daily uptrend overall. Set a daily downtrend. It gives the bears more than enough chances of revisiting these lows. So at this point, the bulls need to play big defense, guys. 485 down to about 468. Moving into XLF right now, financials, another good day for them, right? This is one clean, very large move to the upside. Daily downtrend was in motion. Very nice bounce size right now by the bulls, right? Take a look at this bounce size. That's like a 618 bounce. It gives the bulls the best chance on any retracement down to set a higher low and maybe go for a bit of a trend change. Anything above 47.25, we'll be looking for that higher low. Above us very soon is resistance 51.34 down to 50.78. But overall, the bulls are looking not too bad, right? This is a very healthy weekly bounce, a lot of space created, and now far away from support below us, which is 48.40 down to about 46.83. I'll be patient for some financials names, waiting for maybe the higher lows to come in and try and position on some of my favorite companies in financials that have been kept low. Moving into healthcare right now, not the best day for healthcare, guys. 1.28% to the downside. Huge, huge swing from the top to the bottom of the day overall, which raises the concern, right? Now, we had a daily rally into resistance. Resistance is 148.82 down to about 146.61. And as I was kind of saying here, guys, right? If they can't get it done, this is an entry opportunity, maybe for a short. Why? Well, because, guys, weekly uptrend, breach of the resistance range to the downside again, back test. It's an entry opportunity for a short, right? The entry is here, the stop loss goes there, and you're targeting the lower end of this support range. Easy little trade if you want to take a little bit of a gamble on it, right? Head and shoulders possibly following through too. So we'll take this one day at a time, guys, but the bulls definitely not looking too strong after today's 1 day's worth of price action. SMH right now, semiconductors down 0.42% today. Just could not keep it up, guys. NVIDIA and Broadcom largely bringing down that index overall, but we have not lost the uptrends, right? The higher lows are still set 221.50, right? So we're looking for a higher low again for possible further daily uptrend continuation, but today was not the day for the bulls to do that overall. In terms of the weekly bounce size, as we remain in this daily uptrend, it's still a weekly downtrend, and the size of the bounce right now, although it has been a decent bounce, is nothing to scream home about, right? Only a 40% bounce overall. So if you were to lose this daily uptrend in the short term, it gives the bears more than enough chances of revisiting these lows or maybe even lower, right? The bounce size on the daily is not large enough to say that we also have reclaimed this big support zone that we're in, which is roughly 232.5 down to roughly $218. Moving on to the Russell right now. The Russell, down about 0.56% today, guys, but That's what I was warning about, right? Watch this big area of resistance. It was a weekly big downtrend, nice bounce, but into resistance. Resistance 208 up to roughly 216 for that Russell right now. Huge area of resistance overall, but the bulls not losing the daily uptrend just yet. Still have some decent space, anything above 201.87. Looking for continuation. We'll see if they can continue this rally a bit more, but if you roll over, guys, on the daily, right? Keep in mind, how much is this bounce on a weekly time frame? It's only about a 35% bounce, so that gives the bears more than enough chances to set the lower highs and maybe revisit these lows. They will have to play defense again if that's the case in the 200 down to 192. So what you really want to see, you need to see the Russell Bulls on the daily time frames push, 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 push a bit more, give a nice 50% retracement. Then you have enough space to set up the weekly uptrends. But as of right now, I would say that your longer duration bulls, the weekly bulls, are still in full control despite we're in a daily nice short-term uptrend. And lastly, the Dow Jones. Dow Jones, this is the size of the bounce that you're looking for here, guys, right? Daily downtrend, nice daily uptrend right now. Any move lower, looking for a higher low above 41,500, let's call it. A lot of space, can set a new daily higher low. Almost reclaiming this support zone, guys, 42.5 down to about 41.8. Look at the size of the bounce on the weekly time frame, right? Weekly time frame bounce is pretty decent overall. You're getting some lift on this one, right? From the lower high right there, about a 618 bounce overall for the Dow Jones. So not looking too bad. If you can bounce a little bit more, it gives the bulls a very good chance of resetting into possibly a new weekly uptrend. But we will take it one day at a time, guys. All of these short-term long positions can be unwound by next week. If ever the April 2nd tariff date is worse than everybody expects, we can definitely come a little bit lower again, guys, because the short-term bears are still in control of most of these large index timeframes. That's everything for your indexes, guys. Now let's dive into some Bitcoin. So Bitcoin overall, not looking too bad, but still, this is a very big area, guys. At 92,300 down to roughly 86,005 is a huge area of resistance. It was support for a long time for the bulls. They broke it to the downside, bearish control right there, looking for a lower high. Yeah, keep in mind the size of the bounce on the weekly is a decent size bounce, but it is only a 50% bounce into resistance. Keep watch on the daily time frames. Daily uptrend is nice. The higher lows are set 83,250. If you roll this over and you get the daily downtrend, that's synonymous with the bears looking for leg number 3 possibly on this downswing, and the lower end of support is going to be 73.6 to about 66. We will take this one day at a time. As long as your daily bulls remain in control, you cannot say that this weekly bounce is done. So watch daily control, then that's when you'll know. Are they able to recapture? Then we can have a different discussion about a weekly uptrend recapture. If they lose the daily right here into resistance, guys, the likelihoods of revisiting the lows right now are very high. That's everything for that. Now let's dive into some big tech names, shall we? So Apple up about 1.37% today. Very decent upswing day on Apple, coming very close to its 200-day EMA at about the 224.50 mark. Daily uptrend is nice right now. Anything above 211.50 on a decline, looking for a higher low for further trend continuation, in my opinion. 221 down to 211 is going to be that big area of support that the bulls have held up. But keep in mind, still in the context of a weekly downtrend, looking for a lower high, right? We don't know where the lower high is going to be. That's up to the daily bulls to show it. All right. Now, as of right now on the weekly, only a 38.2% bounce. So if you lose this daily uptrend too quickly into the next few days or next week, the bears have a very good chance of retesting the lows or maybe going even lower. No swing trades for me right now on Apple. The valuation is still a little bit too high, and I don't think it has the best possible momentum for the near-term future. There are several other stocks on this list that may present better risk-to-reward profiles, but all in all, the bulls playing good defense. Moving on to AMD. AMD with another strong day here at the close, up 0.84%, closing almost at the high of the day. Daily uptrend is also very nice on AMD right now. At this point, anything above this guy right here, 102.50, looking for a daily higher low for possible further trend continuation. Who knows? Maybe they push directly into resistance, 120 to 132, or maybe they do it in 2 steps. And even if they roll this daily uptrend over right now, guys, look at the weekly. It was a sweeping weekly downtrend for arguably the last 6 months worth of trade. This is now a weekly 100% engulfing move, and a MACD on a weekly time frame after 6 months of negative momentum, now finally showing a bullish MACD cross overall. The bulls now with a lot of space to reverse this into a possible weekly uptrend. Not looking too bad. And the valuation right now, guys, is even still quite cheap. Even at 114. Sure, you're not picking the lows, but that's not the point. If your time horizon for AMD is the next 2, 3, 4 years for their expansion of their business, expansion of their net margins, their revenues, their EPS, they're still trading very, very, very cheap right now. And you can see what they're trying to do, right? Carve away their small share of the data center business. It should be the best 3 years in AMD's company's history in terms of EPS expansion, in terms of revenue expansion as well down here, and in terms of free cash flow and margin expansion too. That's why I like this one. The risk to reward profile is quite attractive, but notice I always say risk to reward because you cannot say that there's never any risk. Moving on to Amazon right now. Amazon, another strong day here, 1.21% to the upside, looking pretty good, right? The daily bulls have shown they want to play ball. Daily uptrend is now back in motion. Higher lows are set 192.34. Anything above 192.34, looking for a daily higher low for possible further trend continuation. Now above the 200-day EMA and above kind of this shelf of resistance that we were dealing with the last 2 weeks. So if we do pull back, that's probably a likely area, guys. 200 down to 196, a first line of defense for the bulls. And we'll see how high they can push this one, right? Because if you look on the weekly time frame, they got a lot of work to do. Loss of the weekly uptrend is clear as day. If the bulls want to get it back, well, the first thing is giving me a very healthy sized bounce. And you can tell now by the size of the bounce at only about 30%, it's not the greatest bounce at all right now. So if we were to roll over daily downtrend from here, the bears have more than enough chances to roll this one over, go for another leg down. And at that point, I'd be looking for opportunities down here, 191 to 183. That is where I'm looking to write some short put options in the near term future. We'll take this one day at a time. But Amazon's valuation still very respectable right now at about the 1.5, 1.6 peg overall. Moving on to Google. Google, always late to the party, but eventually shows up. I was joking with my Discord. Google is like that one person that you tell to show up to a party at 7 p.m. and they always come at like 9, 10 o'clock. You're wondering if they're ever going to come in the first place, and then they eventually show up. Well, that's pretty much Google, or at least has been Google several times over the last 1 year's worth of trading. Who is in control right now? The daily bulls are back in control, of course. Daily uptrend is set, looking for a higher low on any retracement, anything above 163, looking for a higher low to possibly continue this daily uptrend a little bit higher. We're dealing with short-term resistance, which is 175, and the 200-day EMA is there as well. Now, even though this daily bounce is very nice and adequate, keep in mind who's in control right here. We lost the weekly uptrend, huge weekly downswing, not a downtrend. Downtrend is lower high, lower low, yeah? But if the bounce on the daily ends here and we roll over, only a 25-30% bounce, very weak, gives the Bears more than enough chances of rolling over and retesting the lows. But as of right now, we're protecting support, 175 to 163. Not looking too bad, but we'll take this one day at a time. How high can we get on this bounce? And does it give us enough chances to reset into a weekly uptrend and end this pain? Or might we be heading for one level lower? Either case scenario, whether here or down there, Google is a fantastic buying opportunity. If you measure the risk to reward profile right now, the price to earnings is very low, the PEG ratio is very low, and even though Google does have some short-term headline risk, I think it's still a very solid investment if you measure things on a risk-adjusted basis. Moving on to Meta right now. Meta also with a fantastic day, 1.21% to the upside. Meta trying to also make its steps in reversing all the damage that was done over the last 1 month, yeah? Keep in mind, this is a 100% plus engulfing move. The lows are now here. They haven't set the daily uptrend just yet, but when you have a 100+% engulfer, it looks quite good, right? So any move lowered now, anything above 575, looking for a daily higher low for possible trend switch to an uptrend to the bulls. Daily MACD down there is also crossing, looking quite good. And this is the first step to a little bit of weekly recovery. This was a 100% engulfing move to the downside. So if you want to see the bulls take this back, the V shape is somewhat unlikely. It will most likely be a two-step process. And if you want to see a two-step process, well, you need to give me a good size bounce. As of right now, the bounce is only 0.382, not the best. Need to at least come up to about a 660, 675 for me to really say, okay, the bulls have a very good chance of maybe two-step recovering this process back to the all-time highs. We'll take this one day at a time, guys. Meta, the valuation on Meta is not so cheap right now in terms of a PEG ratio, but it is trading roughly at around a 25, 27 forward price to earnings, which is not that bad, all things considered. onto Microsoft at this point. Microsoft up about 0.53%, and Microsoft too, right? It just moves very slow, but it is moving in the right direction. Nice new daily uptrend on Microsoft, but into resistance right away. Resistance 393 up to about 408. And this has been a level that's been a very important one for the last 1 year of trading. So it will not be so easy for the bulls to break through it. Even though the daily uptrend is nice, if we get rejected here, going to be looking for a higher low. Anything above this guy right here, anything above 381, just looking for a daily higher low to maybe start attacking this resistance area in multiple stages. Keep in mind who's in control of the weekly timeframes though. Weekly downtrend, nice weekly bounce. Measure the size of the weekly bounce, and you will quickly see, well, let me zoom in for you because maybe it's not clear. You'll see only a 40% bounce. So if you lose this daily uptrend from here, unfortunately, that's the end of the weekly bounce, and it gives the bears more than enough chances to retest the lows or lower. And at that point, you'd be looking at support 378 down to roughly 365, which is all these guys back here from December of 2023. But all in all, not too bad on Microsoft. I still think Microsoft is a fantastic opportunity, guys, for a long-term portfolio add. It's one of the strongest companies in the entire tech market, arguably in the entire tech market overall, or in the entire market overall. Very strong fundamentals, guys. Beautiful EPS expansion, very beautiful revenue expansion too, and constantly improving on their free cash flows as well. Moving on to Netflix. Netflix up 2.6%. So I guess when people are thinking about recession stocks, well, maybe people are just not going to cancel their Netflix subscriptions, right? Because they're not going to go out and spend money. They'll just stay home and watch TV. I don't know, but Netflix just continuing on to power up today as well. Daily uptrend is very beautiful, above the moving averages and back above our area of support, 935 down to 900. Any downswing at the current time, looking for a daily higher low, anything above 916, higher low for possible further trend continuation. Netflix is one of those stocks that never lost the weekly uptrend overall, right? Higher lows are set right now at 859. This is a very healthy retracement size bounce. Look at the downswing. Downswing was a 80% retracement. Now, the V-shape is unlikely, but possible. But if you want to ask me my humble expectations, maybe it's going to take somewhat of a two-step recovery process to possibly get back up to the all-time highs, but we'll see, right? At 950, we just did this a few days ago. It was just there. The valuation was not so bad at about 1.67. Now it's probably getting close to like a 1.8, which is not terrible, but the valuation still is a little bit high. When we went over their earnings, guys, for their Q4 earnings from December back in January, they were stellar and fantastic. Showed a company that, was just expanding on everything, expanding margins, expanding free cash flow. The EPS ramp is real. The revenue ramp is also very, very, very solid too. Just a very well-rounded company, all things considered. Moving on to NVIDIA right now. NVIDIA down about 0.59% right now. But overall, guys, just doing a whole lot of nothing, right? Daily uptrend is still underway, but no new highs. Keep in mind the higher lows are here, 114.56. You cannot lose these. If you lose these, you lose the daily uptrend overall. That will be the end of your weekly bounce. But that's not done so far yet. They can still continue onto more of a rally, but the resistance range above us could prove to be somewhat challenging, 125 up to about 135. It's all the resistance from here, the support from here, and now most likely will be acting as big resistance for those bulls. As of right now, the weekly bounce is adequate on NVIDIA. Nothing bad to say, right? In terms of the weekly bounce, about a 50% bounce from bottom to top. So give the bulls a good chance here, guys, at trying to go for the weekly trend change back towards some of the highs. But in the event it doesn't happen and we just get beaten down on NVIDIA again, keep in mind I'll be looking for some swing trades, 110 all the way down to about 102. Big support range. I love playing short puts on NVIDIA when it gives me the chance to do it in that lower range. On to Tesla. Tesla continues its rally to the upside, 3.5%. Not too bad, of a little bit of a short squeeze, maybe a culmination of just fear, selling, and then quick little reverse and trap a bunch of people. Maybe, right? Daily uptrend is nice. At this point, any retracement down, looking for a higher low, anything above 223, looking for a higher low for possible further trend continuation. But we are at big resistance. Number one, the 200-day EMA right above us, 296. And then the end of this resistance range is also 300. It's a big one, guys. Resistance, support, right? Resistance again, resistance. You guys get the point, right? This is a very big level. And who's in control? Still the weekly bears. This daily uptrend has had some legs, but in the grand scheme of things, it is still only about a 35% retracement. Not the best, which means that if Tesla loses it here, and goes for the new daily downtrend, the bears have a lot of opportunities here to flush this one back down and revisit these lows. And that support range as well is 220 to about 186. I'm not playing Tesla right now at all, guys. I don't think there's a very clear risk to reward trade at this current time, especially not with the bears in big control of this weekly downtrend overall. So that is just how I see Tesla right now. They have their earnings coming up Tuesday, the 29th of April, or actually, yeah, Tuesday, 29th of April. Very nice move, though, from the lows. Moving on to Palantir, down about 0.26%, but that's okay. Palantir's up a ton in the last week of trading. Daily uptrend is very nice on this stock as well. At this point, any move down looking for a higher low, anything above $82 looking for a higher low for possible further trend continuation. And there are some levels of support below us, short term and even medium term. Short term, all the moving averages right there at about 89, which is the kind of shelf that was built, this little resistance area, in line with the moving averages too. Maybe something like this if the markets continue moving well. Or the bigger one, of course, is down here, 83.60, down to roughly 77.50. Palantir looking pretty good. Palantir, similar to Netflix, in the whole correction, never lost the weekly uptrend, right? Higher lows are set at 75.15. We will see, because usually, guys, when you have such a large retracement of this move and then down 80% give back of the upswing, normally the expected move is not for just a V shape. It has to be done in a multi-stage process of trend recapture. But we'll see, though. We'll take this one day at a time. Palantir still objectively expensive as a stock. I mean, I love the company. I own the company, right? But you have to call it how it is. The stock is right now very, very expensive overall. So we'll see what happens in the next few days. Palantir does not have earnings all the way through May. I suspect it will move with the rest of the SPY and the QQQ overall. If the markets are good, it'll move well. If the markets are bad, it'll probably underperform. You know, when the Qs go down 3, Palantir goes down 4 or 5 sometimes. So we'll keep an eye on it. But as of right now, the bulls making quick work right now into the daily uptrend continuation. Moving on to SOFI. SOFI getting rejected right now, even though we are in the context of a very nice daily uptrend, getting rejected pretty much exactly where we anticipated, somewhat of a reaction from the bears, yeah? 14 up to about $16. Big resistance range, the entire range here. And this was the lower end of support for a very long time after their IPO. So that being said, if we get a downswing right now on SOFI, you're looking for a higher low. Anything above 1179, looking for a daily higher low for a possible second attempt at coming into that resistance range. Who controls this one on the weekly? Definitely the bears still. Weekly downtrend, but the size of the bounce on the weekly, guys, is pretty good. It's a 50% size bounce. So even if we do come down here a little bit more, maybe looking for a higher low and try to attack it for a second time if the daily bears, you know, can't continue this right away and we just roll over, not too bad, guys. At that point, I will be looking lower and maybe writing some short put options below 12, $11.50, $11. Same place I was going shopping on SOFI before, into the support range, 1170 down to roughly 950. Not a bad area to possibly accumulate some shares. This is a company that you like to hold for either some swing trades or maybe even for a long duration portfolio. And the two last new ones, Uber. Now, Uber, 1.18% to the downside. Very normal. I was saying, watch this resistance range right there, 80 down to about 78. We constantly get rejected at it every time we try to make a move. And today was no different, essentially, right? But the weekly bulls are moving nice. Still a weekly uptrend. The higher lows are still set, 69.39. And I wouldn't say the bulls have lost anything, right? Short term, still a very nice daily uptrend, looking for a higher low. Anything above 70.7, looking for a higher low, and maybe try to attack it in the second stage of that bull run. Overall, below us remains support, 73 down to roughly 69. And this is an area that I was talking about the last few weeks. Decent area to either be writing some puts or maybe attempting a bit of a swing trade to go for the long expansion at roughly $70. It's a one peg. Forward price to earnings is quite cheap for how fast they're growing earnings on a yearly basis. And at a free cash flow yield of 5%, the company's doing a fantastic job, guys, of building those shareholder returns overall. Very nice EPS expansion, very nice revenue expansion. The company, of course, is now profitable and expanding its margins too. Looks like a very successful story, at least for the next few years. And lastly, TSM. TSM needs no introduction. They are arguably the GOATs at what they do in the manufacturing process of semiconductors. Daily uptrend is still underway right now, but getting rejected where we said 183 up to about 193. Very big area, guys. Very, very, very choppy area. This was support for a long time, resistance for another long time. It's going to be proved to be challenging for the bulls right there. But nice daily uptrend, looking for any move lower to be a higher low, anything above 170. Looking for a higher low for possible further trend continuation into the resistance range. If we roll this over from here, though, daily downtrend, who's in control? The weekly bears, quite obviously, yeah? Size of the bounce on the weekly right now is not sufficient enough to say the bulls have a chance, right? Only a 30% bounce size. If we roll over too hard and revisit the lows, which is likely at this point if we do roll over from here, 171 down to 159, a very, very juicy pocket to be building some long-term positions in TSM, or maybe even some swing trades if you're looking for short-term oversold conditions as well. Free cash flow yield is very healthy at 177. Your PEG is about 1.14, under a 20 forward price to earnings. Fantastic revenue and EPS growth and very high net margins, which is why it's one of my favorite companies in the entire market overall. So that's everything for our indexes and big tech list. And you guys thought I couldn't do short videos anymore, huh? We even covered this article for like 5 minutes. All right. All right, now let me not extend it. Let's go through the options list, shall we? So the companies that are moving up the most today, we'll start with them. Trade Desk. Trade Desk, I've said it before, right? In or around the low 50s, if you have a very, well, not very, but if your time horizon is measured in months and years, not a bad opportunity to maybe build a position in Trade Desk. It could take some time to turn around, but the bulls are playing defense where they've played defense many times before, trying to close the monthly candle within the support range, 71 down to 59. I know it's a wide range, but as I said, guys, the recovery on this one is going to take a lot of time. The bears control every single time frame right now, coming out of weekly oversold, but not that bad. We'll see. Can they form a new shelf for us to base some trades off of? We'll see shortly. Etsy, this one's just been down in the dumps for a very long time at this point. Not really interested in playing it. I think there's better companies that operate in that niche. Tesla, we went over. CrowdStrike and cybersecurity. This was on my watch list when I was telling you guys for swing trades back there yet. Expanding very nicely right now is CrowdStrike. Sure, the valuation is a bit high, but the company is growing excessively well. What they're doing right now is they're trying to recapture the size of this bounce, yeah? Very decent bounce, almost a 618 bounce. If CrowdStrike gives me a re-entry again down in this location, 350 to 320, I may oblige and take a little bit of a swing trade on CrowdStrike. Not a bad long-term ad for the portfolio, for a long-term portfolio, but keep in mind, the valuation is very high right now. You're paying a lot for that future growth, but future growth is definitely something that they do have. We have a bunch of other cybersecurity companies as well. My favorite two amongst all of these that are up today is probably this one and Palo Alto Networks. Palo Alto Networks as well. I was waiting for a swing trade in low 170s. It never came to pick us up, but overall, I think you can see what's happening here, yeah? Just trying to go for the continuation of the monthly uptrend expansion. Very healthy. I believe they have their earnings in May, if I'm not mistaken. Yeah, all the way out in May. So we'll have to wait for a while to hear from them, but I like their earnings. We didn't cover their earnings on the channel. My bad, but they do trade a little bit rich as well. No trades for me right now. I gave you guys a level down there. And lastly, Melly. Melly is one of my favorite companies, guys. It's in my long-term portfolio. They're the quote-unquote Amazon of Latin America, even if they don't like to be referred to as such. But also, they have the like a PayPal component. They have a fintech arm where everybody pays for everything using the Mercado Libre software. You can think of it kind of like Alipay that Alibaba uses pretty much in China. It's the same concept. Huge market, guys. I did the valuation today again, even at 2,200, which is why when stocks are at all-time highs, guys, don't care about the price sometimes if you're looking for it for a long-term portfolio. Focus on the valuation. 1.21 PEG, fantastic. Look at these revenue and EPS expansion numbers for the next few years. Fantastic. Free cash flow yield, fantastic. The management team is excessively strong. And take a look at their EPS expansion, guys. Gorgeous EPS expansion. Gorgeous revenue expansion as well. And they have been building that free cash flow. And as the years move on, the company is becoming more and more profitable as the quarters move on through time. Fantastic company for a long-term portfolio. But for some short-term swing trades, unfortunately, guys, you kind of missed the level, right? Here was the breakout, the retest of the short-term level and the run. I mean, you can expand this box a little bit more to see what I mean, right? It was a nice retest, and now it's running. You're a little bit late for a swing trade overall, but those are just some of the largest movers in the market today in terms of the upside. And to the downside, guys, well, UPS continuing to struggle with this, unfortunately, yeah? The tariff fears, the recession fears, the FedEx earnings, and today, overall, very bad day. They got a few price target downgrades as well. Still a very solid company, guys. I'll remind you guys, if you guys are dividend investors, you realize that UPS is like a top 10 dividend, a top 10 company in terms of portfolio weighting in SCHD, yeah? So UPS, very solid company right now at this stage. They pay a 5.66% dividend coming into multiple years worth of support. So if you're a dividend investor and you want to try to buy a company when it's cyclically out of favor, now might not be the worst time at all. You can see what's happening here. Trying to round the corner of cyclicality into EPS expansion and into revenue expansion as well. Could take some time, but at least you're getting compensated. I wouldn't mind playing this one. I've been very firm. If it comes down to the low 100s, 106 to 100, you will see me play this one a bit more aggressively as well. BYD, love this company overall. Warren Buffett owns this company, by the way, if you didn't know. But swing trades are a little bit late, yeah? 43 to 40 was where I was looking for. I added it in my long-term portfolio at 43. If it revisits this range, I will buy it again, guys. Looking for maybe just a monthly revisit. And who knows if it runs a lot more before then, but it's kind of bundled up with the China trade. And the China trade has kind of been a little bit weak, admittedly, over the last roughly, 3-4 days worth of time. AbbVie, another extremely solid company overall, guys, in terms of pharmaceutical plays. But AbbVie, a little bit high right now, guys. A little bit high to play it either for a swing trade or even an add to a long-term portfolio. This one as well pays a very healthy dividend, but the price to earnings right now and the multiples are quite high, and you're also not getting it where I want it. When you're looking for the monthly uptrend expansions, you want to be catching this one on the downswing. So the next evaluation period for me on AbbVie is if we come back down here, let's say to like the lower 180s, I'll look at it again. The dollar stores, not touching the dollar stores. I think Amazon and a number of other companies are disrupting their businesses right now. ANF as well, not the place to be right now. They had their growth rally overall, but now you can see this is kind of like the NVIDIA story, right? Why are they dying right now? Well, just because the comps are getting tougher and tougher. They grew EPS and revenue substantially from 22 to now, but now you can see the growth rates are tapering off. That's the problem they've been having. That's why they've been flushing. So unfortunately, we'll not be visiting this one in the near-term future. And lastly, we'll just do Walmart. Walmart, guys, I keep saying it. Walmart is a buy for me, but it has to be a buy at the right price. I'm personally targeting between $80 and $70 on Walmart. It was very overbought on the monthly RSI. The PEG was expensive. The price to earnings was expensive. The free cash flow yield was very low, but I did this at 95. If I were to redo this in the 70 range, I think it's a very decent buy for Walmart. You need this. This is the 3-month time frame, yeah? You need to cool this 3-month time frame off. It ran a ton, guys. Walmart does not usually move like Palantir. This is like a Palantir move, yeah? Now it's going to normalize. If I can find it down here, 70s, preferably mid 70s, I'd be a big fan of buying Walmart. Sure, there's a lot of other companies, guys, but we'll try to do this as many times as we can. Just go over some of the companies that are either the top winners or the top losers. There's like 200 names in this entire list, right? So I can't go over everything, but also just some names that come to mind. SPGI, I was telling you guys down here, was a very decent area for some swing trades or some portfolio ads. Looking good now. Moody's Corporation, same concept, was a decent trade, looking pretty good now. And even something like a FICO, right? Down here, very decent, looking for a monthly higher low at the 12 EMA for possible continuation, looking like it might want to do it right now. And even some of the travel stocks, the more solid travel stocks, Marriott, not too bad as well. Very strong company, guys. They do not own the hotels. They're a franchise business, kind of like McDonald's, yeah? For them, it's all about licensing fees and franchising fees. That's why they don't have the overhead that other companies that own their properties have. And even Hilton, guys, this one is owned by so many institutions and just single investors that have their own funds as well. Large billionaire investors, right, such as Bill Ackman. Down here, guys, 220, very decent for a monthly retest down there for the Hilton brands of hotels and resorts. Extremely solid company, guys. Marriott and Hilton, very solid. Margins, always solid as well, except, if you look during the pandemic, but that's fairly obvious, right? But EPS and revenue expansion is never a problem for them because of how solid their business models are. So if you like those types of trades, maybe those are something that might fit your description if you're looking for, travel segments for either swing trades or stuff like that, rather than doing the airlines or the cruise lines with very inconsistent revenues and EPS and stuff like that, right? So there's just a few of the swing trades and a few of the names on my list. Hopefully you guys enjoyed that. If you did, consider dropping a like on this video. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these videos every Monday through Friday after the close and recap the day's events, the charts, the technical analysis, swing trades, and Mondays and Fridays, my portfolio and trades as well. And lastly, if you have any questions, please feel free to leave them down below in the description. I'll be answering all questions tonight, so make sure that you guys leave that down there. And lastly, if you guys wanted to be a part of a community of almost 200 members who also trade in very consistent fashions, we trade the wheel strategy, we build long-term portfolios, we do swing trades with either call options, put options, debit spreads, credit spreads, you name it. And here are all of my trades, as a matter of fact. The link is down below in the description. These are all the trades since the inception of the Discord. The green check marks are wins, the red little circles are losses. Always very transparent with you guys with my wins and my losses. The trading styles, as I've said many times on the channel, I love farming credit with options, a lot of short puts, and the wheel strategy as a whole, but you'll also see me do a ton of different directional plays as well, leap call contracts, share swing trades. So there's something for everybody, depending on the size of your account, small, medium, or large. There are all of the trades. We also do private morning live streams every Monday to Friday for 2 hours after the open, where I go through my trades live and also answer all of your questions on your stocks, your options, your long-term portfolios, and everything in between. If you cannot attend, they are always recorded, so you can watch them after, or you can ask me all of your questions in our relevant chat rooms. I'm very fast to answer all throughout the day. We also do private videos for the Discord members, advanced option strategies that I don't really show on YouTube, small, medium, large size account strategies as well, how to grow small accounts, whether you have a small, medium, or large account. What strategy should you be using for different various sizes of accounts with options or otherwise, right? So a lot of those videos, members have been finding very good value. And you also get all my watch lists, all the different watch lists that I have, some of which I don't show on YouTube, such as the large account wheel one, all the stocks that I use for that, and the strategy. If you want to have all these watch lists and all my technical analysis, you just copy paste them with a button, guys. You get all my technical analysis, whether I draw trend lines or support resistance boxes, if you guys are not too familiar with those. And every time I do annotations on over like 100+ companies that I analyze in terms of fundamentals, you just get to copy paste all of my watch lists, all the analysis, literally click copy paste for 2 different buttons. I share everything there. That's as well a very nice perk. And that's pretty much everything. If any of that sounds good to you, well, the link is always down below in the description. Hope to see you in there soon. And if not, I guess I'll see you back on the channel, guys. Pleasure as always. Enjoy the rest of your night, and I'll see you guys back tomorrow after the close. That's it for me. Take care and peace.